And that's why a bank will give you 90 cents on the dollar to buy a business, because the failure rate of a cash flowing business that's established 5+ more years, the failure rate is less than 2%. That's why the bank wants to give you money.
Welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes with Angel Investors Network. Really excited about this conversation with Fadi Malouf. I've been working with Fadi now for several months and known each other for several years. And I got to say, it's been a lot of fun listening to how he talks and how he thinks about things. And of course, learning more about his journey. I think you'll really appreciate how he went from a kid that had some real struggles as a teenager and overcoming some of the biggest odds to becoming a very successful investor and business owner himself, and lots of great insights in this conversation. So stay tuned, and as always, give us a like or subscribe. Thanks.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Welcome back to another episode of Angels, Exits, and Acquisitions. I'm here today with Fadi Malouf. Fadi, how are you doing today?
I'm well. Thank you so much, Jeff. Thank you for having me.
Absolutely. Really looking forward to this conversation. We're going to be talking a lot about, acquisitions and growth through acquisitions and, different criteria investors should be looking at when it comes to investing in all sorts of deals. But before we dive into all that, why don't you give folks a little bit of your background?
Sure. Starting at the age of 17, I lost my dad. And my brother said, "You're not 17, you're 27. You need to take care of yourself." Lived in an apartment with 2 other roommates. And I put myself through school, worked 3 jobs. And eventually, within about 4 years, I had some really great success in the health and fitness industry. Eventually bought my own gym, sold it. And then my second exit was through a software company, also in the health and fitness space. Exited at 2012. I retired for a couple of years, did some traveling, and I realized that I love consulting. I like to start new things. I like to put order in chaos, but I sucked at operation and compliance and maintaining the same old thing, so to speak. So I found business advisory or CRO roles or CMO roles was a lot of fun and adventurous. And I also like to work on simple projects that really boosted the economy. And so until this day, I do that. I did venture into real estate quite for quite some time right now. I act as a private bank providing bridge loans. That is asset-backed through real estate. I do this with my brother. He does exceptionally well with that. He's retired. I'm partially retired. I don't think I'll ever stop working. I love entrepreneurship. I love innovation. And most recently, I'm working and learning how to do global work. So that kind of is that enough of a high-level overview?
Yeah, no, that's awesome. So you got started early on. I mean, that's a bummer to hear about your dad. That's really, and that's a tough age too, right? At 17 years old,
Yeah.
just about to transition out into the real world. So, your brother comes to you and says, "Hey, if you're not 17 anymore, you're 27." What was going through your mind at that point? Like that's a really big leap.
Um, just growing up really fast. I remember an old saying, I don't want to grow up. I want to be a Toys R Us kid. I don't know
Yeah,
if you remember that.
of course, of course.
Found myself saying that for a little while. And it's probably why I'm still a big kid today. I quite adventurous on motorcycle doing, I'm in the last few years, I traveled mostly in Europe, 7, 8 months straight in Europe on a motorcycle, just being adventurous, trying to see the
Yeah.
world. I've learned how to play drums. I've written and published a book. I've written close to 200 blogs. And by the way, writing and communication is definitely not my strength, but I knew in business and in life, communication is going to be key. I learned things about finance. I'm not a numbers guy, but of course, I'm constantly digging into spreadsheets and looking at numbers. My brother talks in numbers, so if I want to try to keep up with him, I have to study numbers. At the end of the day, I cannot stand investing in anything speculative, and there has to be some hard numbers behind the vision and the dream. And I used to always look at the people, and the people really is the key ingredient. But because I get so many opportunities and so many offers, and 99.9% of people want money, I have to look at the high level of revenues and profits and how long you've been doing the business. And historically, you've got to been you got to have had some time to work out all the cobwebs, so to speak, all the kinks and stuff like that. I founded a number of companies. I love startups, but between I, working with so many startups, I learned the hard way and not really looking at the stats of the failure of startups. And part a testament to who I am, I just like to do hard things. I've always done hard things, but I've gotten to an age where it does not make sense anymore.
So
It's
you finally
not
had to grow up, huh?
I had to grow up. Exactly. It's not a smart ROI. As and I start working with people later on in life. And one of my friend Idris says he's got a program called the Second Chance Retirement. There's a lot of people missed the boat on the first one. So they're later on in their life and they're like, shit, I cannot retire. And that's majority of Americans. There's, I believe, 1.1% of Americans that have $1 million to retire, and that's not enough. No, so we've been tricked of what
Yeah.
40 years 401k can do for us.
Yeah, no doubt about it. I mean, I have an entire book written about right there, all about that. So yeah, I definitely understand that. So taking me back, right? You're 17. Your father's on your picture. Your brother's there, and you're like, okay, I don't want to grow up, but of course you kind of had to,
Yeah.
and thrust out in the world. Did you like what was the decision? Were you kind of supporting and taking care of your mom at that point, or what was going on?
No, well, there was no decision. It was just I have to take action. My mom, we downsized from the house when I lost my dad, and she moved into an apartment. And I think I lived with her for about a week before my brother came in and like, Mom can't support you, and I was out. And I think I lived with my brother for less than a month, and then bounced around with a few friends, and finally got an apartment with a few other friends. And I remember working. I was, um, what did I do, man? I worked at so many jobs. I did what I could do to survive and pay the bills. I'll never forget getting my first cell phone, mobile phone. I think it was around 17 years old. I still have the same phone number, by the way. For that, since I was 17 years old, um, just paying for my own bills, going to school. I remember that I finally started doing good in college when I was building websites, and it finally became a form of way for me to express, to communicate. Uh, Language alone wasn't working, and I started to realize that I need to communicate with visuals. And developing websites really helped me do that. And it was even back then, it was really tough, but it was much easier to pull in a few pictures and tie in a few words to that picture. And so communication through websites was my thing. Even though I didn't know anything about an audience, who are you targeting in this picture? So I would create these presentations and these websites, but had no clue who the audience was. I just did things that I liked, and believe it or not, it worked to an extent, and I just attracted more of people like me. And I kind of drifted away from that. I started to focus on what are the gaps in the market. I started getting really good at targeting and then building a brand and marketing around an audience. And then I've actually just come full circle. And my favorite word is edification. In taking what you do organically and what you've been formally trained, and a combination of the two is usually the best recipe. And so between doing that, I find that I If people ask me, why should somebody invest with me? Well, I don't know. I'll just tell you what I invest in and what's worked. And typically that's the type of people I like to work with, other investors that what my strategy makes sense for me and it makes sense for them. When I did personal training and I won bodybuilding competitions, I was not telling them you should do this, this, that. I told them just this is what I was doing and this is how it worked for me. You can try it and see how it works out for you. And ultimately, it worked. Okay. And I would say 90% of it was just execution and being consistent and knowing what you're buying into. When I made really good money, and even at the age of 25, I made this stupidest mistakes because in an investment, people will say, "Oh, I had this money and I needed to invest it. I was worried about losing it." So I made some investments. I bought things I didn't know what I was buying into. And if you're an investor or any high net worth income earner, you've probably all have fallen into this mistake of investing in something and you don't know what it is. So it's important to, even if people or friends have a genuine interest in helping you, they tell you to invest something. I highly encourage them to ask them, well, why did you invest in this? What do you know about this company? Those I think are, I would say, good tips on investments. Know what you're buying into. So I don't
I
know.
like it. So,
Cool.
all right. So, yeah, you went around a lot of corners right there. So, we're going to come back
Yeah, we
real
did.
quick. And so, all right. So, you got into, you said bodybuilding there for a little bit, health and wellness, health and fitness. So it sounds like you gravitated towards a certain sector or something that's personal to you. And then you were able to turn that into a business along the way and achieved a little bit of success in doing that. Right. So, what do you say about people that say, "Oh, well, just follow your passion and the money will follow"? Because I'm not saying that's what you did, but it sounds like you found something that worked for you, and then you ended up making money with it.
Yeah, for sure. Um, I followed what I knew and what I was passionate about before I ever took a sales course or knew anything about sales. There was three ingredients, and actually, I was doing a sales training earlier today, and I was mentioning this. Thankfully, I had a very nurturing mother and a very devoted dad um, that instilled in me in caring in others.
Mhm.
It's either you genuinely care about people or you don't. I don't think that's a trained skill set. It's either it's there or it's not. Um, it's like chemistry with a partner. It's either there or it's not. And so I'm very grateful that that is baked in me. I genuinely care about people. All right. And I have to stop myself from just being lovey dovey and want to give everybody hugs. It doesn't work in business. I don't recommend it. Um, the second thing is what you said, passion. Really being interested and passionate about it and let that be your driver. And the third is naturally being passionate about something. It makes you very curious. And so you become very knowledgeable about that thing. For me, it was, uh, at 17, my brother took me under his wings. He says, "You're not 17, you're 27. Come work with me as a personal trainer." And I had no clue what I was doing. I was training people in the gym and I was being mentored by him and his partner. And over time, it worked out. It actually worked out really well because I'm very visual. I'm very kinesthetic. And I learned this later on in my life that these are really key, important things to know about yourself and make sure that you align with a career that works for you. So I got really lucky that I was in an industry that synced with my natural skill sets. So, long story short, my brother said, get one client, produce great results, and that's all the marketing that you need. You'll get plenty of referrals. You build a name for yourself. Well, I did for 25 years. I never did a lick of marketing, and people came to me. Now, when I did start focusing on the on money, that's when I actually did worse in business. That's when I stopped making money, and uh, to go back to answer your question, the passion in the health and fitness and the dedication at producing results is ultimately the behavior that we want, for what I want. I've in adopting to different mindsets, I veered off of that and I lost my narrative. So, but thankfully, I caught myself and I'm back on track. So the history of the personal training has always been and still is, I take my business personal and I take a very hands-on approach in the deals that I do. In fact, I'm usually vested in it either by my time, money, resources, or all of the above.
I
So
like it. So, all right. So you followed it and it was something, again, you were kind of thrust into it and then you got a chance to really learn. But like you said, it played to your skills and your strengths, which I think is really important. And I'm glad you said that because I want to transition a little bit into, later career. You had a couple exits. You, it sounds like the passion was the journey, right? Not so much like, a lot of people say, oh, well, I'm passionate about X, right? I honestly don't know how anybody becomes passionate about something until they go on a journey, right? And they find out, oh man, I really enjoy this piece of this thing that I'm doing. And you got pretty good at that, pretty clear at it. And like you said, you fell into it in a way that really benefited you long term. And when you and I really started working together, which the audience wants to know that a little bit, I was having to have conversations with Fadi. Well, it's really late at night. He's over in the mountains in Albania on his motorcycle tour, right? And he's having a really good time. I'm like, man, this guy's got to figure it out. All right. He took his retirement, like you said, and you got a chance to go around the world. But now you get a chance to, I'd say, kind of give back and invest into things. And now that you understand more of your strengths, what are some of the things that you look for that gets you excited about, investing and being on the other side, not the person building the company more, but looking for other people building companies?
yeah, the simple answer is impact. Really is. I just love the impact. The testimonies, which they're far further in between now and public because the kind of work that I do takes a long time and it's in the private sector. When I was in the health and fitness space, people were very open to leaving a review. But I always say until this day, my currency are the review, what people say about their experience working with us. And uh, yeah, I don't know if that simply just answers your question right there. If you want me to expand more on it, I can.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
Yeah. So when you say impact, if a business is going to make an impact, is there a certain area you like to see making an impact in? Is it, economic development? Is it social impact?
On a personal level and on an economic, I'll answer that both ways. On a personal, one thing that we take for granted is time. It is definitely finite, and you don't really know that until you've, I guess, just gotten a bit older. You've been through some battles, so to speak, and having time. I remember when I was younger, I did focus more on generating more revenue for the client. But then I started asking, I was like, well, what are you doing with all this money? Are you just working more? Or uh, are you spending more time with your family? Are you getting a chance to do the hobbies? I started out as necessity to survive at the age of 17.
Mhm.
And my first exit, I didn't know how to live. I started drinking. I started partying. I had too much time on my hand. I actually was miserable, and I thought I was having a heart attack at the early age of 30. I had to pull over, and I was having, I guess, a major panic attack or some sort. I started having major anxiety I'd never had in my entire life before. And it was like a big question mark of meaning of life. I think more so when, as you guys can see with this mental health issue that we have, it's going to be more prevalent. We have more of this issue happening more and more. Thankfully, I caught that earlier. I went through that mental turmoil, and I come out on the other end to, if I share the story, is only because in my first book, I write the whole premises of it is strength through struggle. Once you've overcome that, you're only talking about it because you really want to and empower the next person that's struggling with the same issue. I'm on this call strictly for that. Be honest with you. At the end of the day, I'm hoping whoever's listening to this take one thing and it helps them and makes their life better. I've done my job. Okay. Whether it's inspired to be consistent, if it just motivates you, inspires you to get a better ROI on your investment. I personally want to impact you to you're better today than you were yesterday, and even better tomorrow. Something I learned is that we should always leave things better than you find it, physically or with another person. And now that's on a personal note. Economically, we have baby boomers, that have really great businesses that don't know how to exit. And then we have a lot of people with, like I was looking at Forbes 400 yesterday. We have more young people that are billionaires with no guidance and no skill set. And the gap that we're serving here in the market is marrying these opportunities together. So you have businesses that their kids don't want for whatever reason. I won't go, what industry, what it is. The kids have grown up around it. They want something else. They want to be a YouTuber, whatever it may be. And then you do have families with money, but don't have guidance for whatever reason, or purpose, or the skill set to build a business. There is actually that gap exists. Okay. So, given our age, Jeff, you and I, we've I don't know what's your background, but I didn't come with very much. When I lost my dad, I got a Social Security check for $2,000, and he says, "Good luck."
Right.
And that's more than most people could probably have. So I was fortunate to even have that $2,000 check. But I wish that I knew anything about investments back there. I try to hold on to that $2,000 for as long as I can. It's spend it as little as I can and only use it maybe for emergency. I regret that I bought a house at the age of 21, believe it or not. I paid it off in 5 years. I was
Wow.
brought
And you
really
still
good,
regret it, huh?
and I regret it.
Why?
Knowing what I know now, I would say don't buy a house, especially in today's market. Buy a business. More than 90%
Okay.
of businesses fail.
Mhm.
And that's why a bank will give you 85 to 90% on the dollar, 90 cents on the dollar to buy a business, because the failure rate of a cash flow in business that's established 5+ more years, the failure rate is less than 2%. That's why the bank wants to give you money. So
So don't start a business, buy a business. I like that. And don't buy real estate, buy a business. I also like that.
don't buy a real estate that you think it's an asset. It's not an asset.
Right.
It is, and it's expense, right? Um, and it's at the end of the year, it's on the balance sheet. Did it provide you income, or was it an expense? That's very basic, right? We know this. So back to the economy. Essentially, what's happening with FM Enterprises, our portfolio, we're doing micro acquisitions, right? It's a micro PE. I went from physical education to private equity, is what I like to say. Uh, so more and more of this is happening. Less companies are going public, and there's a huge demand for investors looking for asset-backed companies that are simple and that have a really great return on their money. They're backed by real estate or equipment or art, or Jeff, this is your area of expertise, but mine is on the real estate piece. But they're software companies that are pretty straightforward. They're cash flowing, and now they just need some more capital for it to grow. So a large private equity firm that may start an acquisition on 50 million right? So your EBITDA is 5 million, and you did a lot of the hard work, the grunt work to get it to that 5 million. Kudos to you. And now you're ready to exit or be part of a continuum of capital raises and increased valuation from 5 million to 50 million, and grow that way through acquisition. I wish that I'd learned about acquisitions, growth through acquisitions. I've done it like the hard way of doing sales and marketing. And I'm glad I did it, but because it made me learn a lot about sales and marketing, which is essential for every business.
Yeah, I mean,
It's
I
oxygen
think it's the
for a
same
business.
thing, right? Like I wish I would have learned about growth through acquisition early on. I wish I would have learned about this. On the other hand, would I have had the skill set to really take advantage of that back then? And having gone through, the lumps and the hard knocks of starting a business, growing a business, building a business, all of that stuff along the way,
Yeah,
I think then gives you the clarity to say, okay, now if I want to go buy a business, at least I know what to look for, right?
absolutely. And I look at hundreds of companies every week, every month at least. I look at a lot of them online because they'll give me an idea of how they're presenting themselves. But until you actually have a conversation and look at their P&Ls, you don't really know what's happening. Uh, as you know, 99.9% of our deals are off market. A lot of times these companies don't even know they can sell. Most companies don't even know what they're valued at. Of course, these are some of the smaller companies, but the larger companies, usually they founded the company and they're really, they overvalue what they have. They don't think about what's worth in the market. It's like, the best analogy I can give you is like somebody bought a house and they bought the corner lot or the cul-de-sac lot, or the most expensive house in the neighborhood, and they put all these upgrades in there, and all the other houses around it, the comps are, let's just say, half a million, and they have $2 million in their house. They say, well, my house is worth 2 million. Well, it's like, well, everybody else in the neighborhood is worth half a million, so that's gonna
Right.
bring your value down.
Way
You're
down.
the
Yep.
last one to let anybody buys. It's whoever buys is because they just love the house. You really, you make it really hard for anybody to buy it. And we don't mind. Jeff, we've worked on those type of deals. They could be, quite interesting, but it's,
Hmm.
you know, uh, we like hard things. So we've
Well,
probably taken on some of those projects.
yeah, no, trust me, yeah, hard knock life, right? Um, so what are some things you guys look for when it comes to acquiring a business?
So, at two levels, one, my personally, and then two, with a partnership. Ideally, companies are doing over 20 million in revenue and 5 million at EBITDA is our target with partners. Um, and independently, I've done bridge loans. They're ranged between half a million to 2 million, and there's a sweet spot for bridge loans to do that. So right now, what I'm doing is buying these smaller companies around the same price point. So $1 million, they're profiting at least 300,000, and I'm doing this specifically not not being as an operator. I have to factor in there's enough profits to hire a six figure salary income for an operator, somebody that knows how to run the business. And I'm buying businesses that I may not know about, but it be of my interest. Like, I'll tell you what I don't like: liquor, cigars. Somebody came to me today with a liquor company. Yeah, he is making a lot of money, but I'm not for liquor. Cigars, same thing. It's a great product. This company is making money. I won't take it. I'll probably pass it over to somebody else that will take it. So because of my purpose of just having a positive impact, I'd rather do with something that's more healthy.
Okay. Yeah, no, that fits right back into kind of your ideal profile of what you're looking for. And so, um, when an investor is looking at a business or whether they would like to just go out there and buy it themselves versus invest in like a PE firm or a micro PE firm like yours, like you were talking about, what are some of the things that someone should be looking for or thinking about as they're going down this process?
As far as type of businesses,
either type of businesses or some of the things they should look out for, right?
Yeah. So most recently, I actually wasn't looking for it, but it's close because it's in a wellness space and they actually own the real estate as well. So it's early, it's 2 years in, but if it was 5 years, it would have worked out really well. There's a real estate piece aspect of it, and then the cash flow is really nice. I think 30% in the last few months are showing like 50% in return on the investment. And it's an older couple, and I think they're gonna be ready to retire pretty soon. So they're gonna be a motivated seller. And we're in talks about getting them to a $5 billion valuation, so they can exit. But in the meantime, that's what we're gonna do is help them grow. And then I may buy the business, or be a partner, or bring in an investor or a buyer to buy the business. So anything health related, obviously, I like marketing agencies, lead gen, B2B or B2C. Um, those are businesses that are scalable and are interested in to me. I've looked at car car washes and laundromats and so forth like that. Um, it does interest me if there's a real estate component to it. I like them because they're very simple. And I actually started really considering them more than ever before because I was traveling in Europe, and I found them they are lucrative and they're not very expensive to buy. And so I thought, okay, maybe this is something that I would invest in, but it wouldn't be my main type of investments. Let's just say that. I
Right.
think I feel 80% of wealth is generated through real estate. And but what really makes the real estate valuable is the businesses being operated out of there. We need to serve the debt with a business that's really supporting the community. So there's most of these small businesses rely on uh, these type of businesses. Um, and we wouldn't have these small communities and cities and towns without these type of businesses. So there's something there that's new for me. I haven't bought one of these businesses before, but it does interest me. I would never get into a restaurant business unless it's just a uh, uh, something that I want personal. I think I will buy a restaurant business at some point. My family has been in the, have had many businesses, restaurant businesses, the last 30 years, and we've got one really doing really well right now in Chamblee, in Atlanta. Um, just sometimes it's easier to say no. You know what? Not you're not going to invest in. I like aviation. I've learned how to fly recently, so I'm open to anything in aviation. Things of my interest. I love motorcycles. Something that's related to two wheels. Transportation, motivation. I like it, but I feel like it's very. There's a lot of logistics and it's complicated, so I kind of stay
Sure.
away from it.
Well,
Uh,
okay. So if I'm reading between the lines, there's a lot of, like you said, there's these businesses in small communities. They're just like mainstays of every community. So that's one. Two, understanding. Right. I think you're alluding to the fact that you understand the industry, so you like to get involved in it if you understand the industry. But if you don't understand it, or if it doesn't align with your personal morals or values, stay away from it. Right. But then, if I'm reading between the lines here, it's also, well, it's got to be profitable, right? You want to go after a profitable business. You're not looking to acquire a problem child, right?
yeah, for sure.
Yeah.
Technology would be ideal. I'm not a tech guy, although I exited from a software company, but I wouldn't have done it without my partners. I have one guy that was really heading the operation and another person that was handling the technology piece. Uh, Very scalable. Again, it needs to be a simple platform, and it's profitable. I understand a lot of these startups are built on safe valuation. That's not going to work for me. I'm still at some point, maybe down the road, I will get involved in more of those type of investments. When I look at the Forbes 400, and I was looking at the trends of how they've increased their net worth and how this dropped, and or this continuously dropping and stuff like that. And I started looking back at my portfolio. I actually started investing late 25. I'm almost 50, so almost 25 years. And most of my growth in my portfolio has been the last 8 years. Of course, as you know, the market has been bullish for the last 8 years. But even before that, the advisors that was managing my portfolio, they really set a very low expectation of what that my portfolio was going to do. Even during their times, the portfolio had a much better return. The brokers were making the money, and the clients were not. I won't get into that, but
Yeah.
it wasn't just in those portfolios that I was doing these different types of investment. Everything in my net worth has consistently gone up. So I use that for like a measuring stick, so to speak. It's like, okay, I'm heading in the right direction. I'm continuously improving in my net worth. A lot of people would judge people based on their car and what they're driving and their income or whatever it may be. You'll notice me. I'm not a flashy guy. I've had nice things, but the nicest experiences that I've had, nobody knows about it. So if I get a exotic sports car, I'm I'm not showing it off. I'm just going to get in it and go enjoy a ride in it.
Right. Yeah,
Uh,
exactly. Well, I found some of the wealthiest people in the world that I've met are as humble and modest as you can be, and I think it's because, and they're also generally the happier ones too. Um,
let's go.
Not the flashy person who feels like they have something to prove to the world with a chip on their shoulder, right? They're always looking over their back, wondering if somebody's trying to take it from them, right?
Yeah,
And so I think that from that perspective, I think that's a really good thing for people to realize is that it's the journey, like we talked about, and making money can be a yardstick if you want it to be.
yeah,
But for a lot of people, and myself included, it's like, listen, it's nice to just not have to worry about certain things in life, but not that you have to show it off to everybody else, right? It's the journey is the valuable part.
for sure.
So and I love that there's certain things in life that you're allowed to have them, but you don't have to flaunt it, right? It's great. So, Fadi, before we finish up here and wrap up, I have one question I want to ask you um, that I think is really going to be helpful for the folks listening, which is going back and looking at your 17-year-old self, right? That kid that just lost his father and is about to have to go out there and move out on his own, figure everything else out. Knowing what you know now and everything you've gone through, if you can go back and give yourself one piece of advice, what would that be?
Don't buy a house.
I love it. It sounds like that was a really bad house, apparently, even though you paid it off pretty quickly.
I love my first house. I paid it off in 5 years, and then I actually took every bit of equity in that and bought the next house. Um, I would have, uh, I'll tell you this: the things that I complained about in my early age in the space of being a personal trainer and being a professional bodybuilder, I spent quite a bit on myself. And everything that I did from sun up to sundown, my entire routine was very regimented. There's a documentary by this crazy guy, Brian Johnson or something like that. How to not to die. People say that he's an oil salesman, or selling steak spin or whatever you call it. Yeah,
Yeah,
that phrase.
snake oil salesman. Yeah,
Snake oils. Anyways, um, that I didn't realize what I had. I was really passionate about being the best version of myself. And the people who walked into our personal training gym, by the way, was an absolute dump. I don't even know why people came in there and spend the money that they did. So clearly it was about the relationship and the results that we produce for our clients. And I'm so thankful that I had that. I don't regret that. I didn't. I had guys there drove up in old big pickup trucks. There were millionaires, probably even a billionaire by now. They were very humble, and um, I was in an industry where not a lot of people can afford a personal trainer, especially back in the day. I was around a lot of successful people, and I had a lot of respect for the focus and what I've been able to do with my body. So it's hard to say that I regret anything that I've that's developed me, got me to where I am right now. I believe in God, and I believe in faith that He has a divine journey for you. And I just try to take um, those little small wins and share them and just see what opens up. I share them because I want to empower the next person, inspire the next person to be the best version of themselves. So if go back 17 years, I learning how to acquire businesses. I can't tell you. It probably was not a cool thing now. Then it's probably not a cool thing now. Maybe it's becoming cool to buy your own business, but I think it's damn cool as hell. It's like, here, I'll give you one analogy. Okay, you can drive a car. You can get your driver's license at 15 or 16 years old, but you don't know how to build a car to drive it. And that's what buying a business is. You're buying a vehicle that's going to get you from point A to point B. All you have to know is how to drive it. And maybe the buying a business is not like a car, maybe like more like a plane. So you got to be careful because you could crash and burn.
You could crash and burn, yeah, for sure.
And it's really on you, not because some asshole pulled out in front of you.
Right? Yep, absolutely. Absolutely.
So I hope that helps and inspires.
I like it. All right, Fadi. So how do people find you? How do they learn how they can either invest with you guys or learn from you guys? Where do they find you online?
Yeah, great. So I'm very active on LinkedIn. You can DM me. Just put in my name, Fadi Malouf, even in Google. That's probably one of the first things that comes up on our website or on LinkedIn. I have a very clear buy box, and I'm happy to share that one pager with you guys. If you do reach out, see what business that we're looking for. We're very hungry to buy some businesses. We have endless amount of capital, but we're always taking on other investors because there's like my friend um, Robert tells me we're like Baskin Robbins, all 31 flavors. We never know what interests people. So I feel like we become matchmakers, glorified matchmakers in the space of acquisition. So yeah, we are looking for business to buy ourselves for our partners. And if it is not a fit for us, we like to connect you with the right buyer or seller and help you through that process. It's a lot of fun.
Awesome. Fadi Malouf, thanks so much for being here on the Angels, Exits, and Acquisitions podcast. If you guys are watching it, make sure you go check out the show notes. We'll have links to everything that Fadi was just mentioning in there, and make sure you go check them out and connect with them on LinkedIn. Fadi, thanks so much for being here.
Thanks, buddy. Appreciate you. Have a good one. Bye for now.